Hi, James. Thanks for joining us.
Thanks, Jermaine. It's good to be here. Thanks for the opportunity.
Thank you for accepting our invite. So we saw each other just a few weeks ago at your graduation ceremony.
Yeah.
What does that ceremony mean for Lasco?
Interesting question, Jermaine. And I think to answer it properly, I should just reflect a little bit on how we got here. It was in 2010 that the companies enlisted on the junior market of Jamaica Stock Exchange. And that required certain processes to be done and certain structures to be put in place. And the end result, it worked for us quite well. It worked for Lasco quite well. Just evidence the growth you have seen in Lasco companies. But just by listing on the junior stock exchange, it gave us certain advantages. For one, we were able to, through the prospectus and other things, talk about the company, talk about the governance structures that we're putting in place, talk about the goals that we had, and immediately we got a national stage. In addition, because we were listing and there was an IPO, we had funds rolling in from investors. And also at the same time, coincidentally, and obviously this would happen, we knew it would have happened, is that financial institutions started to look at us in a different light. Because here was a company now subjected to rules or companies of the Jamaica Stock Exchange. Disclosures were necessary, proper governance structures were necessary. So lenders, funders would look at us in a more favorable light, that we had a good organization, they could have confidence, and we were transparent and accountable. At the same time, consumers, clients, and other people in the society got to know about Lasco companies, and that is a big plus. So you got a lot of publicity around it. People identified the brands we were working with, and those were the elements that allowed the companies to grow to the extent that they have in this short 13-year period. Now, graduating to the stock market or the main market, all of those benefits still accrue, even more so. In a sense, we came of age in the 13 years to date, 13 and a half years to be exact year, and graduated to the main market, playing in a different league. We are major corporate companies, not entities today. And we are well recognized for our brands. We're well recognized for our corporate governance. We are well recognized for our disclosures. Our websites are well developed. Disclosures are according to what we have to do in terms of the stipulations and regulations of Jamaica Stock Exchange. So all of that means that we have more exposure. It forms the basis, graduating. It is saying, look, we have come a long way in 13 years. We have matured. We have demonstrated that we are solid companies, and we are now poised for even more growth. The evidence of that, if you look at our asset base, if you look at our balance sheets, they're all very strong, good indices, good KPIs. And so graduating means further growth, further exposure, further expansion, all to the benefit of stakeholders.
All right, awesome. So what do you think? So there was mention of, just what this would mean for the legacy of the Honorable L.E.A.R.N. Can you speak to, what he would have looked forward to for this process as well?
This was always his dream, and he was meticulous about that. And he liked to say that all the funds that flowed from the initial IPO, and the other concessions that junior market companies enjoyed, such as the tax remission, the corporate tax remission, all of that was pumped back in the business to use to finance the business, to expand the business, to invest in capital equipment, to sustain working capital and all of that. And everything that he gained from that, he reinvested in the business. And that explains a big part, the rapid growth of the two companies. And his dream was soon, and we started this discussion, in I think it's 2019, just after I joined the company. We had a couple of things to look at. One was we had grown and we'll continue to grow. And how are we going to deal with the future for the companies? For one, we were still on a tax remission regime. We are still not paying the full corporate tax, income tax. And the question arose, how are we going to grow now that we have to, in a year's time, we have to pay the full corporate tax and ensure that we keep increasing dividends and return to the shareholders? So we developed strategies for that. And the strategy was a simple one, was growth, because there was room for growth, big room for growth, and we still have room for growth. And the second thing we looked at is, how long are we going to stay on the junior market? Because we can opt to move to the main market. And we said, okay, that is something we should consider, that before the 15 years would have expired, we'll make the move to the main market. So that was one of the dreams and aspirations and hopes he had, because he used to say he thinks that the companies are really belonging to the main market, not to the junior market at this point in time. So it's an attestation to the efforts he has put into growing the companies, investing in the companies, having confidence in the companies, and just building some awesome teams in the companies to be able to propel the growth to where we are. We're big companies today. I think I mentioned at the stock exchange ceremony we had that the asset base of both companies exceed $13 billion. That's awesome when you consider that's a short 13 years. The revenues in Lasco distributors is today, well, at the end of the last fiscal year, not the one just concluded, I can't speak about that, but was in excess of $26 billion, with excellent ratios. Operational ratios are great. Margins are great for a distribution company. Likewise, in the manufacturing company, the revenue is just under $11.5 billion for the year past, with good margins, good operating margins. And this is a reflection of the work we have done to grow efficiency, drive efficiency, reduce costs, while not impairing quality of what we do. It's a reflection of our communication strategy to consumers, how we engage consumers. You know, we have, Jermaine, strong brands.
Yes.
The brands still have a lot of brand bandwidth. And the strategy going forward is to continue to grow. We have been growing, both companies, organically growing in excess, in double digits for the last 4 or 5 years. And that's commendable. And we think there is still room for growth.
Yes.
So it would have made him proud. And I'm sure in spirit, his spirit is still in the organization. This is a moment he would have savored, right? So
Yes.
less than 1 year before his passed, and we have accomplished that in his memory, and it's a part of his legacy.
Awesome. I hear such great things about him. I wish I had the opportunity to meet him myself, but as you said, I think his spirit is the culture he had started, and just his vision is still being seen within the organization.
Yeah.
So I wanted to ask you, you mentioned growth a couple of times, and I wanted to understand what are some of the tangible milestones you look forward to in terms of growth? What does growth look like for you from this point forward?
Yeah, one of the fundamental strategies of Lasco, the Lasco companies, was organic growth. That remains the fundamental strategy. Why organic growth? We have good brands. We have products that are relevant to the consumers, that are in touch with trends in the market. And we still have room to increase distribution, both locally and in overseas markets. We think we're not doing badly at distribution, but we're not excellent yet. We're not top of the pyramid yet. And it's a work in progress. So whereas we have had growth in double digits, organic growth in the last couple of years, this is still the objective, to grow organically. And we're looking at growth in double digits for the next 3-4 years and even beyond. We have the capacity to produce. We have the talent to produce. We have the innovative ability to launch new products. And so we're looking at growth in the region of 10 to 12% per year, organic growth. Now, Jermaine, this is not to say, and that is a priority in Lasco, and we continue to invest to that effect. As we speak, we're investing in additional warehouse spaces. We're investing in digitalization. We're investing in upskilling people. Last year was a great year for training people. We invested a lot of time and resources in just developing people, because that's the engine of growth for NLN, is your talent. So we're going to continue to grow organically as a priority. That is not to exclude opportunities for inorganic growth. But whatever we're going to acquire or get involved in by way of partnerships, by way of brands that we may purchase, must have the potential to be accretive to our margins. It should not be dilutive to what we're doing. And it should be a strategic fit to what our companies are involved in, which is food and nutrition and refreshing beverages. That's our wheelhouse. That's where we operate. And there are opportunities. And so our radar is always out, and we have looked at a number of opportunities and still look at some, or still are looking at some, to be able to acquire or to merge with somebody to grow the business inorganically. But the focus is on organic growth. As I said, we have the output capacity, manufacturing capacity, we have the distribution capacity, we have brands that resonate with our people, and we offer products in every category and services that is value for money.
Okay. So I was wondering, is it that you prefer organic growth because of maybe the way that the brand would have been grown? You seem to be very, very peculiar about how your brand is managed. I even saw that on display at the ceremony, right? So is it when you think about maybe the work you'd have to do if it's an inorganic opportunity, are you more careful about how you align with other brands?
Yeah. Look, brands in this sort of business, your brand is probably the biggest asset you have. And so we have invested a lot of money in brand building and brand curation over the years. We have invested a lot of money in consumer engagement and consumer communication over the years. And the value a company like Lasco can unlock from its brands, its well-recognized brands, is tremendous. So we shouldn't ignore that. That's not to say there are not other interesting brands that we could add to the stable. And we look at them and we'll add them if there's a strategic fit. It's not to exclude growing inorganically at all. It's just that we still have a lot of value to unlock from our brands. You know, Lasco Manufacturing is a manufacturing company. We have state-of-the-art manufacturing equipment, and we are constantly upgrading and adding to it. So it only makes good sense to exploit what you have to the fullest before you move on to something else. It makes sense to be close to saturation point and to exploit the equipment and everything that you have than to keep just adding and adding to the assets and not extracting the full value from them. More so when the market is able to absorb what you're producing. So I just want to reiterate, organic growth, there's still a lot to be gained from that through our brands. To grow inorganically, to acquire other brands, yes, the possibility is there, and it's something we keep looking at. As I said, it must be a strategic fit to what we want to do. If it's not already adding to our margins, it should have the potential within a reasonable time to do. A reasonable time with some reasonable investments to do so.
Okay, reasonable. So with your plans for growth, what will you be able to finance that growth using existing cash, or will you be looking to raise maybe additional capital or debt?
Well, you know how you finance going forward is always an interesting question. Today we are essentially debt free, and so the opportunity is there to take on debt. We're also to a certain extent cash rich, and going forward, what we'll do is finance the operations and the investment through a combination of debt and equity. Now that we have moved to the main market, we are the ability or the capability now to look at our share capital. So everything is on the table. But yes, going forward, it will be a combination of debt and equity, I think.
Okay. So I wanted to ask, with so well-known dividend investor, especially in our community. So my question with this cash, is there plans to increase dividends? Is there a plan to maybe, what can shareholders look forward to there?
Jeremy, in terms of, we're a junior market company until 2 weeks ago. We were junior market companies, and over the past 10 years, we paid out in excess of $2 billion in dividends from each company. For me, that is commendable. And if you look at the evolution of dividend payment over the past, let's say, 4 years, there's been a constant increase. We're here to at the behest of our shareholders, and we know the need to have good returns to the shareholders. And so I mentioned that we are cash rich. I'm not going to say we're increasing dividends this year or what. You'll hear about that in due course. It's a process we have to go through. We've had a dividend policy which is posted on the website of the Jamaica Stock Exchange that says we'll return, I think, 25% of profits, all things being equal, each year to shareholders. That's not cast in stone. And we're aware that if we have cash, we should look after our shareholders. It's important that we keep them. They have been very patient in the early years. And when we're in a position to offer more, we will do that. Bearing in mind, it's also in their interest, your interest as a shareholder, that we continue to grow the business in a sustainable way. So dividends, we are concerned about our shareholders. And look, our boards are properly constituted. Our boards, we have been diligent about making appointments to the boards. And is a preponderance of independent directors. And, their primary role is to protect all shareholders, So interesting times are ahead in terms of your last questions.
Okay, I like the sound of that, right? So I have a question, like with what we've seen in terms of interest rates, increased costs across the board. How do you manage rising costs, as it relates to, production, expansion, the things that you are investing in terms of your team? And how do you manage inputs that may come from outside the country?
Yeah, those are all very important things. And some things, they're the things we focus on daily, how to contain cost without compromising the quality of products and services and all of that. We are import dependent for certain things, and we have seen material price inflation over the past 3 years, significant material price variation. What we have done is a combination of things. One is that we have built up a system of alternate suppliers, so we can get the best bang for the buck and for given quality from our suppliers. So we negotiate hard with our suppliers. We have constant dialogue. Secondly, on the operational side, that is where we really have the big effort to drive operational efficiency in the companies. That is where value lies, and that is where a lot of value is consumed. How can I become more efficient and eventually pass on products at a lower price, a reasonable price to consumers, while turning a profit for the benefit of the shareholders? So operational efficiency is probably one of the most important things you can do in managing interest rates, in managing cash, in managing your organization. And that has been the focus in Lasco for at least the past 5 years, and it's reflected in the ratios that you see. The other thing is that we keep innovating and adding new products to the stable of products that we have. And usually these new products, they come with interesting margins, but they are still value for money options. We are very careful about passing on price increases. I think last year, for example, we did not increase prices, although we had material price increases and interest rates increases and all of these things. And that is because we have bled costs out of the system. We have flattened our organizations, really flat organizations, created multifaceted teams, and on the back of using technology to its fullest extent. Where a lot of investment has taken place recently in Lasco is in technological upgrades. So it's a combination of efficiency improvements based on technology, flat organizations, reducing structural costs as much as possible without impairing the ability of the organization to function effectively and deliver the necessary return to shareholders. That's the model we have pursued, and I think that's the model that most companies are trying to pursue.
Yeah.
To make progress, and that on the back of growth, because when you start growing your top line and you increase your efficiency in the middle of that P&L, it means at the bottom you're going to have better results. So one of the focus we have is growing top line and growing bottom line. It's not or, it's both. We're not just about revenue growth, we're about revenue growth, profitable revenue growth with improving margins. How you improve margins is basically through efficiency, through your innovative way of doing business.
Okay.
Make the organization as simple as possible, avoiding cathedrals.
Yeah.
And eliminating bureaucracy, focusing on speed and effectiveness of execution.
Okay, I see that. Okay, I understand that. So you've not seen any delays in terms of there was some companies concerned about shipping delays, or any challenges in that arena for you, or you've been able to see consistent flow of raw materials or other things you may need for your company?
Well, Jordan, one of the things we pride ourselves on in the Lasco company is that we have what we think is a robust risk management framework. And yes, we have anticipated a lot of the risk that and COVID taught us a lot, just before COVID and during COVID. And I mentioned we have built up a cadre of alternate suppliers. So although there are delays, we're able to call on different regions of the world. We get supplies out of China, we get supplies out of Europe, supplies out of Latin America, out of the United States. And we don't have single source suppliers. We have built up a group of suppliers geographically dispersed. And although we have had delay, and in addition to that, at the start of the pandemic, we took some bold decisions to carry excess stocks. Our inventory of materials went up. Of course, there was a cost to it, but when you do the cost-benefit analysis of having something to produce and not producing anything while keeping our workforce employed, the answer is very simple. So since the pandemic, we have been carrying, if you look at our inventory, look at the balance sheets, the inventories have been tending to be on the high side, but that's an insurance policy.
Okay.
Because we have had shipping delays. We have had recently we had delays because of the problems in the Panama Canal. And then they were exacerbated by problems in the Red Sea with the Houthis attacking shipping in the Red Sea. This place is a global supply chain. So what happens in the east affects what happens in the west. And so we had alternatives, and we were sitting and still are sitting on what you would call excess stock as a sort of insurance.
Okay. So my final question, and I must say thank you so much for this opportunity. I'm really enjoying this conversation. I almost don't want it to end, but I will ask you this last question. What would you say to as final remarks to your investors, those who have been with you, for the last few years, maybe even from the start, and those who may be noticing Lasco is now on the main market and might be considering to invest? What would you say to those persons as we look to the future for Lasco?
In a very short sentence, it's the place to invest. We have good growth plans, we have good brands, we have good people, we have good technology. We are in the food and beverage space. We are focusing strongly on nutrition. Our investment program in the companies continue. And we see possibilities for further growth, good growth, and improved returns. We are solid companies. We have solid governance structures. We are transparent. We are open. And we're looking for opportunities to grow. And I can tell you, we are in the midst now of looking at additional investments in plant and equipment. As we speak, we're expanding our distribution warehouse at White Mall by some 65,000 square feet. That process is in place because the business has outgrown what we had. In fact, we are now renting space outside, which is not a very economic way to do business. You have a lot of movements. Inefficiency comes in. On the manufacturing side, I can't say too much about it, but we're invested in new technologies to offer a range of new products that we think will resonate with our consuming markets. And when I say consuming markets, not only Jamaica, it's the Caribbean and it's the eastern seaboard of the United States. And we're looking to expand our export presence. We're building up, we're doing quite well in exports to the Caribbean and to the United States, but there's still a lot of potential to grow. So it's a good place to put your money in Lasco.
Okay, awesome. Thank you so much, James. I don't know if there's anything you wanted to add that I maybe failed to ask.
Well, we could continue talking, but I think enough has been said to give you a flavor of where we are, what graduation means to us, and I've given you a flavor of where we're coming from. And we understand that there are certain things about Lasco that I always link to the chairman, past chairman Lassel's chin, Honorable Lassel's chin. It's a certain humility about what we do. It's being effective in what we do. It's care for our people at large. It's attention to what is now called the environmental, governance, and social world aspects of the business. So we're here for the long term, and we're poised for further growth.
Okay, thank you so much, James.
Thanks a lot, Jermaine. Thanks for having me. Thanks.